And it's the midweek edition of Business Morning on Channels Television. I'm Ladi Williams. Thank you for joining us.
You're welcome. Good morning. I'm Ini John McCowell. It's going to be an hour of talking business on Channels TV this time. We'll start with the headlines news. There's no resource-dependent country that will watch a business bordering on energy security and fiscal fold its arms without having a say in the operational decision of such business. That's according to the Group Managing Director of NNPC, Mr. Mele Kyari, while answering questions on the rationale behind NNPC's acquisition of equity in Dangote Refinery. Mr. Kyari insists that these developments will have huge benefits, making Nigeria a hub for petroleum production and supply, thereby improving oil and gas industry in the country.
They will come to work. By 2022, it should come into production. And what that will do is to deliver over 50 million liters of gasoline, to be specific, into our markets. We're also working on that. They have a connection. We're also working on our refineries to make sure that we fix them. We have awarded the contract for Port Harcourt refinery rehabilitation. And ultimately, we are going to close that of Warri and Kaduna very soon in July so that all of them will work contemporaneously. And at the end of the day, we'll deliver all of them. The net effect is that you're going to have an environment where Nigeria becomes a hub for petroleum product supply. And it's going to change the dynamics of petroleum supply, even globally, in the sense that the flow is coming from Europe today and is going to be reversed to some other direction, will be the supplier for West Africa legitimately and also many other parts of the world. So the meaning of this is that there's an opportunity that has thrown at us. And I'm not sure Mr. Dangote wants to sell his equity in the refinery. I can confirm that it was at our instance that we started this engagement. He did not want to sell these shares in this refinery. I'm sure Nigerians will agree with me that many people have shares in Dangote Sugar, Dangote, all kinds of things that he's doing. That if he has thrown it open to the market, and I'm sure Nigerians will rush to buy shares. Having said that, there is no resource-dependent country that will watch a business of this scale, which is bordering on energy security, which also has implication of even fiscal security of our country, and you watch it and you don't have a say. And for us as a strategy, it just didn't start today. We started this process long before Dangote came on. Started his refinery project. We'll take equity in very significant businesses that are anchored on the oil and gas operations. Fertilizer, methanol plants, small modular, small condensate refineries, and so many other businesses that we're dealing with, so that we can expand our portfolio. But also, because we are the national oil company, we have a responsibility to guarantee energy security for our country. And there's no way you can have that say except you have a say in the board of this institution. And that's why anyone that is going to construct a refinery that is in the excess of 50,000 barrels per day, we'll talk to them, we'll take equity in it as much as we are going to be able to pay for it.
And oil prices extended the previous day's small gains the day after an industry report showed U.S. crude stockpiles fell last week, overriding trader and investor concerns about transportation curbs in some countries as COVID-19 cases surge. Brent crude was up 42 cents at $75.16 a barrel after edging higher yesterday. U.S. crude was up 53 cents at $73.51 a barrel, having risen 0.1% in the previous session. Crude stocks in the U.S. were down by 8.2 million barrels. The American Petroleum Institute's data showed, according to two sources who spoke in condition of anonymity, still gasoline inventories rose by 2.4 million barrels and distillate stocks were up by 428,000 barrels.
On the 1st of June 2021, OPEC Plus agreed to extend its April 2021 commitment to ease production constraints that will see states boost output by 2 million barrels per day from May to July 2021. This is because following the outbreak of the pandemic, OPEC Plus members had to adhere to various output adjustments in the face of aggregate demand and supply, as well as shocks. Tomorrow, a month after, the group is meeting again to, among other things, decide on the possibility of further cuts, with the Delta variant of COVID-19 threatening the return to normalcy and ease of restrictions. But what are the expectations from the meeting of OPEC Plus tomorrow? Folarin Adedeji, portfolio manager at Afrinvest Asset Management Limited, joins us now to bear his mind on that. Hello, Folarin. Good morning.
Hello. Good morning. Can you hear me, please?
Yes, we can hear you.
Okay. Yes. So as we can see, what has been happening with this OPEC Plus in Saudi Arabia, we can see that the Saudis are looking to actually tighten grip of supply, and that might go this year. So we expect to see crude oil prices over around where we are at $73 to $75 per barrel. The Saudi Arabians too are also price level, and I think currently works for other OPEC members. So I don't see any drastic increase in supply until August later in the year.
So do you think that'll be all they'll be discussing tomorrow at OPEC Plus?
Oh no, they would also be discussing other producers like the likes of Iran coming on board. They'll be looking at sanctions that will be lifted by the US if a deal is being struck, and countries like where our levels are 1.5 million barrels per day, countries who are currently suffering the impact of COVID and running serious, huge budget deficits. Those countries like Nigeria and the likes would also be discussed if there's room for us to actually add more capacity to our supply for us to be able to balance the budgets.
All right, Farhan, do you think the group will agree that Saudi Arabia continue to take its cut of 1 million barrels per day as it plans to keep markets tight?
Oh yes, definitely. I see the Saudis. Our opinion is that the Saudis those cuts will be held tight, because prices have gotten to the levels where producers in OPEC Plus are actually happy, and we also feel that the Saudis will probably put back that supply into the markets around August. In addition to that, we can see that the shale guys in the US, even with the drastic increase in price of crude oil prices, crude oil has done about 84% from its levels from last year, and the shale guys have not even to the party. What we are seeing in the shale market in the US is that actually clamoring for profitability of these shale drilling companies, so that they can be able to repay the huge debt which they currently hold in stock. So we can see that the rig count in the US has actually not even increased at the data released by Baker Hughes.
All right,
Falari.
Hello, Falari, can you hear me?
Yeah, I can hear you.
Okay, please do hold your thoughts. We need to fix, I think your network is not very clean. So we'll just take a break now. We'll try and fix that, and then we'll come back and continue this conversation. Please stay on. It's Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television, and we have Folari Adedeji, Portfolio Manager with AfriInvest, talking to us ahead of OPEC Plus meeting tomorrow. Hello, Folari. Can you hear us?
Oh, okay.
Okay.
Hear you. Can you hear me?
Yes. Okay, yeah.
Yes.
Okay, we can hear you. So what about the issue with Iran and the potential of lifting sanctions? Where do you see that conversation going tomorrow at the meeting?
Yeah, with Iran, it's very tricky. The US is being very, very clear the levels they want Iran to actually have concessions. However, we don't see a clear deal coming up anytime soon. Hopefully, if the US and Iran are willing to get into a deal, we will see one maybe in the third quarter of the year.
All right, so for Nigeria, there is the capped production at 1.5 million barrels per day, below the FGN's benchmark output of 1.8 million barrels. But with oil prices well above the FGN's benchmark of $40 per barrel, would you say we're making the most of this time?
Well, at 1.5 million barrels, I don't think we're making the most of this. Even with the prices getting to 75 and above. There is a conscious need for Nigeria to actually get its regulatory environment right, so that we can get the desired investment, more oil from the system. So and there is a need for the PIB bill to be passed quite as quickly as possible. Even several deadlines have not been met to pass that quick, so that investments can actually come in and we can increase our levels of production.
Yeah, talking about the PIB, well, I think I heard from a grapevine that it should be passed maybe by tomorrow, we hope. But the lawmakers had promised that it to be passed in June, and we're hoping that today is the last day of June, though. If it's the first day of July, I think we can still do that. But do you see this as one platform that could accelerate private investment and maximize the surge in price of oil? But why are we taking so much time to maximize this platform?
Oh, yes. Like you said, the last deadline was supposed to be in June. Now, today is 30th of June, and we still don't have any. So what we'll be hearing is that the bill will probably be 15th of July. By 15th of July, the lawmakers go back for their summer holidays. Yes. So if that can be done within very steep and tight deadlines, that will be very great news for Nigeria. As we're all aware, we have it's been published and accounted for $15 billion worth of investment, which should have gone into oil drilling activities, have been stopped. Even the likes of Shell, Chevron, and every one of them have put in more investment, pending when this regulatory headwind is clear. So if that can be done, that's a very positive. That's a good news for Nigeria. Actually elevates the reserves and in turn the economy as a whole. Yeah.
Well, let's just get your thoughts. We heard Mr. Kyari speak earlier on defending their investment in Dangote. What's your thoughts on the federal government getting involved in that when we have refineries that have not been working for many years and not in very good state, and now they want to get involved in the private refinery?
It's a tricky one. It's a tricky deal to look at. I think for the NNPC, everyone has been clamoring for the sale of the especially the government-owned refineries. And in addition to that, their current position that's coming into Dangote refinery projects to get to come in as equity. Well, we'll see how far that goes. We are not clear. We don't have preview of all the terms and conditions for what has been discussed at the back end. Well, for Nigeria as a whole, that is, if you're looking at the deal as a whole, it might actually be positive for Nigeria because that guarantees us some form of conditions, guarantees us some form of supply of petrochemicals like petrol, diesel, and other things. Then that's fine. That could actually help us. Okay. Like I said, we're not sure if that deal will pull through. If it pulls through, that might actually impact us in terms of supply. It means we probably will get guaranteed supply from Dangote Refinery.
But what happens if the government cannot get the 20% stake?
Well, it's status quo. We are going back to everything remains the same supply constraint that we've been facing, and that's what we are going to be seeing. And there's an urgent need for government to actually sell the current refineries that we have on the ground, because if you look at the NNPC books, those refineries keep copying capital injection, but the required levels of production have not been met. So there's need for private investors to actually come into into the current public infrastructure.
But when you say they should sell it, I've had this conversation before, and we're asking who are those who can afford it? You know, maybe that's one of the reasons. Who can maintain it? Who can run these very capital-intensive projects called refineries?
Yes. Yeah, you're very correct. That's why there is a need for, so even before selling, there's a need for bringing in technical people that the refinery go to. There'll be need of due diligence to be done to ensure that whosoever they are selling it capacity in terms of funding and technical know-how to run optimally.
All right, on the 29th of March, President Muhammadu Buhari announced the Decade of Gas, an initiative designed to ensure that, Nigeria takes advantage of global energy transition. Has the surge in price of oil distracted, Nigeria from this initiative?
Oh, yeah. Like oil has actually, crude has actually distracted us as a people, that's Nigeria. And the gas initiative by the current administration is very good initiative. There is a need for us to actually maximize our strengths, which is actually not crude, but is gas. Nigeria has one of the top largest gas reserve in the world, and there's a need for us to actually explore that route. As we can see, how gas is becoming very important in the mix of energy that we're looking into the future. The likes of renewable energies, renewable energies like wind, solar coming into the mix, and gas looks cleaner. Gas is better than coal, and that's a very good initiative for Nigeria to actually explore. With that, we think if we can expand our current gas production capacity, that would actually help drive power generation to a lot better heights. Yes.
All right. What's your outlook for price of oil going forward?
Yeah, going forward, we see a more stable but also bullish outcome. As we can see what COVID has done to economies around the world, and we can see a ramp up in vaccination, especially in the Western Hemisphere. We can see the US doing almost 50 to 5% fully vaccinated. We can also see the likes of Europe actually ramping up. So we see economies opening up, and demand will continue to trend higher, and we think price of crude $75 to $80 per barrel in the short term. However, on the long term, we also see declining in crude as a commodity itself, as we can see the advances and technology that is being implemented with renewable energies, and that will actually affect the price of crude going into the long-term future.
All right, thank you so much. Folami Adedeji, Portfolio Manager with Afri Invest. Thanks so much for sharing your thoughts, and do enjoy the rest of your day. Well, we'll take a break now. When we come back, AFEX Communities Market is next. Do stay with us.
Welcome back. You're still watching Business Morning, and it's time to review activities in the FX commodities market for the weekend, 28th of June, 2021. A look at the summary now shows that total value traded, number of contracts and deals were all in the red. The week under consideration. Michael Martins, now Portfolio Manager with FX, is here to tell us more. Hello, Michael.
Hi, Laddie. Good morning.
Thank you for
having me once again.
Great to have you. Well, it's the end of the second quarter. Can you give us an overview of how well the commodities market has performed from start of the season till date?
So, yes, the commodities market is done extremely well this year. But just before we even go into that, let's just take a look over what happened over the course of this week with the commodities market. So if you look at the data in front of you with the commodities market summary, there was about a 79.36% decline in the total value of transactions traded on the exchange, which fell from 1.01 billion to close the week at just 227 million naira in the total value traded. With the total number of contracts for the week, we also saw red, with the value falling by 71.64% from around 27,781 contracts to close the trading week at 7,880 contracts. The total number of deals also fell by 35.19%, falling from 54 deals to 35 deals. The AFEX Commodities Index, which is the ACI, however, saw a slight increase of 2.58% from around 460 index points to close trading week at 471.88 index point. The AFEX Export Index also saw green in the week under consideration, going up slightly by 1.58% from around 169.09 index points to close the trading week at 171.77 index points. With regards to the volume of transactions on the exchange, we generally saw a decline across board. From one commodity to the other. The only exception that we saw in the week under consideration was paddy rice, which went up from 696 contracts to close the trading week at 2,630 contracts. With regards to price changes on the exchange, we saw a fair bit of activity with the top gainers being first, with the first of the top gainers being soybean, which went up by 3.59%. to close the trading week at just over 34,000 naira per contract. We also saw the price of sorghum go up by 3.47% to close the trading week at just over 24,000 naira per contract. Ginger also went up by 2.84% to close the trading week at just over 111,000 naira per contract. Maize also went up by 2.36% to close the trading week at 23,983 naira per contract. Paddy rice also went up by 1.86% to close the trading week at just under 23,000 naira per contract. And last but not least, with the top gainers, we had cashew, which went up by 1.62% to close the trading week at 45,407 naira per contract. With the losers, we essentially just had two, which would be sesame and cocoa, which fell by 5.16% and 0.09% respectively. And lastly, we have the fair trade exchange traded commodity, which went up slightly over the course of the week by 0.98% to close the trading week at 14,360 naira per contract. With regards to how well commodities market has done this season, I think the commodities market has done significantly well. I believe they've done significantly well. So just to put a few numbers to the narrative, maize has done approximately 53.25% from start of season till date. Soybean has been on fire, to which it has gone up by more than 74% from start of season till date. Paddy rice has not done too well in comparison, to which it has only gone up by 13.86% from start of season till date. Sorghum and ginger have also gone up by more than 50% from start of season till date. I think that generally indicates a bullish market all around with this year's commodities market. And it would show a bit of an anomaly, though, because what we tend to see in the commodities market is the fact that in any 4-year commodity cycle, you tend to see, commodities prices sort of give you like an average return over like a 3-year period, and then you have a bullish market happening in the 4th year. But what we have seen in recent time is the fact that for the past 2 years, the commodities market has essentially been bullish, right? So we saw this similar numbers happen last year with maize, soybean, and paddy rice going up by more than 50% across board, and we are seeing similar numbers this year across the commodities market.
So, what, in your view, is driving this bullish sentiment?
Thank you very much for that question. So I think, by and large, what has driven the commodities market to sort of behave in this pattern, which is sort of different from what we have seen historically, is the fact that certain macroeconomic factors are now sort of different, or at the very least, they are changing more frequently than we expect them to. So in the past couple of years, the major drivers have been the exchange rate, which has changed significantly over the past 4 years. And also would be the inflation rate, which is of course significantly high, as we currently have it. Some of the other drivers for, the current season that we are in would be, the COVID-19 restrictions that happened last year, which affected, production, which slightly affected production, but more so from a processor standpoint. So some companies that were unable to process significant numbers last year are now currently doing so and ramping up production, which of course then feeds into, the demand that we are having in the commodities market. Part of it would also be the willingness of, let's say, the federal government and by extension the central bank, to sort of intervene in the market to help stabilize prices with what we then currently have with the strategic grain reserve. So it is the case that we are having a lot of these macroeconomic factors change, and we are having them change more frequently than we had previously expected them to.
All right, so, with the various production challenges plaguing the country currently, the state of food security has become heightened, and the next food season seems to look bleak. And that's why we're going to be discussing now the agricultural production progress with Michael Martin here. So how is the 2021 wet season production going?
So I think I believe the production for these years is going as well as can be expected. So there are a few factors that are different, that are occurring this year that are slightly different from what we had last year. So the first of which would be the availability of fertilizer. So last year, because of COVID-19 and a bit of the lockdown situation that we had in the country, we didn't have as much availability of fertilizer, and that was one. And secondly, the distribution was sort of skewed, meaning that it wasn't readily available across board. But that is not the case this year. There has been a significant supply of fertilizer into the commodities market, meaning that farmers are now able to cultivate whatever proportion that they want to cultivate for this year, using quality inputs. Another issue this year that we are seeing has also been that that fertilizer is now spread across board, meaning that it's now essentially available. Another factor that we are seeing play out this year, which of course feeds significantly into farmers' ability to cultivate for the year, is rainfall. So aside from the fact that rainfall this year started a bit later than we had expected them to, they have been the rains have been falling in sufficient numbers, at least from the last week of May up until now. So for the past 4 weeks, we have seen that rainfall number slide up significantly. So which that means that we can expect to see a higher number of cultivation happen this year in comparison to the previous year. I mean, if we were to take our own input disbursement program as a bit of a proxy for the entire cultivation market, last week you had mentioned doing only about 18,000 farmers. This week we're already up to more than 25,000 farmers, which then sort of indicates that farmers are now more willing to cultivate. Are now more willing to cultivate, which would essentially lead into higher production numbers for this year. So I don't think, from a food security standpoint with regards to production, I don't think we would have anything to worry about with regards to farmer cultivation, cultivating sufficient numbers for the year.
Well, that sounds really good and comforting because sometimes when we talk of food security, we also look at the security situation in the country, and with all the inflation and the constraints and then the pandemic. So are you saying that all this will not have any impact on production at the end of the day?
I mean, I'm not saying that. I'm saying that they would have little to no effect on the on production numbers for this year. So if you take the insecurity issue for one, so first off, we had COVID-19 last year, which sort of prevented the movement of people and goods from one place to another. We don't have that same scenario this year. And also from an insecurity standpoint, you would find that a lot of that insecurity sort of tends to happen around urban areas and then quasi-urban regions, and not necessarily the rural areas where farmers are sort of situated. So meaning that farmers are by and large not being prevented from going to their farm to sort of cultivate. Another thing that might have been an issue this year was rainfall, to which I had mentioned earlier that they were a bit late, but then they have been sufficient over the past couple of weeks. So in comparison, I don't think that there's going to be any sort of significant impact with those three macroeconomic factors. I don't think there's going to be any sort of significant impact on the production numbers for this year.
All right, so also noticed that rains came a little late this year. What impact do you believe this can have on production?
So at the late rainfall, as it sustained itself, we might have seen a significant impact on input disbursement, because this is what essentially tends to happen with any sort of cultivation timeline. Farmers would essentially wait for the first rain to come before they then begin to start sourcing for inputs to sort of help them cultivate. So at the rain sort of delayed any longer than they already have, we would have seen a significant impact on cultivation and of course the eventual effect on the production numbers. But like I said, that's not what happened this year. They were a bit late, but they have been sufficient over the past couple of weeks, meaning that the cultivation numbers are going to go up. More farmers are going to cultivate this year. And it's also the case that because of inflation, right, we're going to have it might be the case that we would have higher competitive prices this year at harvest in comparison to last year, meaning that farmers can then, cultivate with the expectation that they're going to get a higher, price for whatever commodity that they cultivate at harvest. So I think those two factors will sort of help mitigate against the late rainfall for this year.
And given your review so far, how can you compare this year to previous production season, like last year?
So just taking the meteorological data that we have from NIMET as a proxy, so the data that we have sort of essentially suggests that the rainfall numbers that we would have this year would be similar to the numbers that we had last year. And so we feel to take account of the fact that last year had a bit of restrictions with regards to COVID-19, and that this year doesn't have the same restrictions. I think that we're going to see a slightly higher production numbers this year in comparison to last year. And it's also the case that because we've had higher competitive commodity prices for the past 2 or 3 years, it's also the case that cultivation has been significantly profitable for smallholder farmers in the past 2 or 3 years. So that in itself builds in a fair degree of optimism into this year's cultivation, meaning that a lot more farmers are now anticipating higher prices, which would essentially lead into higher which would essentially lead into higher production numbers for the year. So I think by and large, the year 2021 would have a higher would have a higher production numbers in comparison to last year, 2020.
So you do expect this bullish sentiment to run through the third quarter of the year?
No, certainly not. Right. So what we tend to see, like I have said a lot of times during the course of this show, is the fact that that price will tend to start sort of depreciating over the third quarter, I believe. And that's partly due to the fact that a lot of the focus right now, especially for smallholder farmers and every other participant in the commodities ecosystem, is actually on input disbursement and cultivation. And of course, the expectation would then be to say, can we wait till the middle of July rather to sort of have a sense of what this year's production number would be before we then start making any sort of anticipation about where prices are going to end up. But to essentially answer your question, I think that prices are essentially going to rise for the next couple of weeks before they then significantly correct in expectation of this year's harvest. So I don't think that the bullishness is going to continue to the end of the third quarter. Best case scenario, you're going to see the bullishness continue till the month of July, and then you're going to see a massive price correction in the month of August and September.
All right. Thank you so much, Michael, for joining us this morning and sharing your thoughts with us on AFEX Commodities Update. Do enjoy the rest of your day.
Thank you for having me. You too.
So for the first time in 6 straight trading sessions, the equities market advanced yesterday. Great news, Will.
Good morning.
Good morning.
Yes.
Well, that was to conclude the AFEX segment. Well, like I was saying, Will, after 6 losses or 6 red zone market trading sessions, we have 1 green yesterday, and that's great news, I believe.
Yes, indeed, Ini. Good morning. It is great news. It was a great rebound for the equities market, snapping up Monday's losses. And I'm thinking it's because of maybe it's the last day of the month or the last trading week of the month. And,
so at least we'll have a great story to cap the month.
Yes, and portfolio managers have tried probably to shop their portfolios. And we can see that following the late interest in Dangote Sugar and some tier 2 banks like Union Bank, buying up the stocks of Union Bank and FCMB. But let's look at the numbers and see what they're saying. The all-share index advanced about 0.15% yesterday to 37,640.75 points, adding 29 billion naira to the NGX equity capitalization. But to make sense of what's happening in the markets, let's talk to Abdulrasheed Momo, a stockbroker at TLW Stockbrokers. Good morning, Abdulrasheed.
Good morning.
Abdulrasheed, great rebound for the market. What a growth. But tell us what's really happening at the equities market. Are we going to see more comebacks like this?
You see, one thing about the market now, market is more scientifically driven now. People watch out for critical levels. Yesterday was indeed, I would say, a lifesaver, because that rebound actually happened on a critical support levels we had in ending of May. That was about the 37,500 levels. So that rebound actually came at the right time. It gives the market hope that people are watching all these levels. Because if you look at most of the stocks are actually trading flat. Right? They are not breaking any support levels. The support levels are still intact. Stocks like UBA, Zenith, Access, Itco made a breakout after giving themselves from GT Bank to Itco, he finally broke a recent level about 29 naira level to about 30 naira. And with financials coming in, I guess it's going to post the market. But for now, it's still very tricky because there are no new highs. Generally, on all the most of the indexes on ground, there are no new highs. But
okay,
I
Abdurrashid.
think it's great. It's great.
Yeah, we love that. You
great.
mentioned the banking counter. What about the industrial counter? We've seen that there's been low activities in that index. What's really driving the downward performance in Boa Cement, Dangote Cement, and the rest of them, Lafarge?
Well, I would say those sectors are actually, they are heavyweights. Anytime they cough, there's always panic in the market. So far, I think it's just explaining it. The market is doing well for now. There are no new lows, right? Everything is intact. What makes a good market is volume, right? You see volume across most of these sectors. The only ones that are going up, like gainers and losers, you see the low cap stocks that are making the gainers and losers gaining 10%. But the other sectors, you see those are the heavyweights. You see volumes. So what it tells us that investors are keen into those. I'll tell them, let's say the NSD, the NGX 30, the NGX 60. Those are the blue chip stocks. So basically, investors know what they want and they are going in for those stocks. With time, what happens is that when prices consolidate for a long time, what happens is that we actually expect a breakout, either a breakout or a fake out. A fake out is coming down, or a breakout is when prices go higher. But I see more of a breakout in the long term for the market.
Okay. Thank you so much, Abdurashid. Thank you for coming on the show.
You.
And let's go to the unlisted market where we have the NASD index remaining unchanged, that's same as Monday's, and we also have the market cap remaining at 536.52 billion naira. The volume went up 10.27 million units. Value was high at 185.16 million naira, and the deals was 34 transactions made. So this is what we have for you today. We don't have more time to give you information about the market. But like we said, the market is doing well. Let's hope that...
The equities market.
The equities market is doing well. And we're hoping that this is the last day of trading. This is the last day of the month. We're hoping next month gives us a good one.
Yeah, we do hope at least we will start the month of July in the green zone also.
Yeah, on a positive note. We're hoping that.
All right, thank you so much, Will. We'll take a break now on Business Morning. When we come back, we'll do an opening call to London. Do stay with us. Welcome back to Business Morning on Channels Television. We now get updates from London. And here is Juliana. Hello, Juliana. Good morning.
Good morning, Annie.
So foreign business leaders will no longer need to quarantine when arriving in England. And small businesses are not happy with this. Why is that?
Well, they're not happy, Annie, because they've been excluded from this list. And it's not really the first time that the British government have faced accusations, especially in the last part of the pandemic, that it's one rule for some and another rule for others, and it's usually the less well-off that have to suffer. It started, this accusation, pretty much last week when we found out that UEFA and FIFA officials will be able to come and watch matches at Wembley without having to face quarantine. And now there's a new government rule that will allow CEOs of big business, if you are from an amber-listed country, to come into UK and not have to quarantine. Now, the argument on the other side is that it's the small to medium-sized enterprises that are really at the heartbeat of Britain's economic recovery. So they don't know why they've been excluded from this list. Also, as well, a lot of hospitality bosses want the British government to expand what they consider business travel to include people from other sectors. But government spokesperson is pretty stiff on these rules. They say that if a meeting can take place via email or over the phone or Zoom, then they won't have to come into the country. But they're sticking to their guns. If you're a big business owner with, I believe, about 1,000 staff earning a particular amount every year, then you can come into the country without having to quarantine for 7 to 10 days.
Well, the government has also announced new legislation to allow central and local governments greater freedom to support businesses. What's the subsidy control bill about?
Yeah, well, the subsidy control bill will be signed into legislation much later today by British lawmakers. And what it does is it replaces an EU control bill, which basically looks at how a government get involved with private enterprise, basically bailing out companies should they be failing. And historically, I think the British government have been known to not really support private business as much as some of their European counterparts, such as Germany and France. Now, of course, we have left the EU, and a lot of the time length that we've allowed to keep some of these legislations going has come to the end. So Kwasi Kwarteng, the business secretary here in Britain, is celebrating this newfound freedom, is what he calls it. And especially during the pandemic, so many small businesses have really suffered. So the government are looking forward to trying to help them top up some of their income. There have been concerns by the EU, especially now as we're competitors. They don't want Britain to overdo it. And the World Trade Organization did say that Britain will have to stick to very, very strict rules when it comes to trading and how much they are going to be helping private business. But it's celebrated and it will get signed through Parliament today.
All right, cool. And we'll hope to see how it works. Well, thank you so much, Juliana. Enjoy the rest of your day. And do remember 1:30 during Business Incorporated. We'll talk to you again.
I won't forget.
Yeah. So we move over to the crypto space now with Ladi Bitcoin. Got rejected at the very last resistance, which is about $35,000.
Yes, it got rejected there. And some traders I spoke to said, oh, if it doesn't break that 36,400, it might have a pullback of some sort. And we've had that. We have that Bitcoin at 35,000 this morning. Major altcoins are in the red at 8 a.m. We only have Bitcoin and Ethereum still maintaining the green this morning. Market cap, $1.42 trillion traded in the total crypto market, is up 0.13%. 24-hour volume traded at 8 a.m. this morning, $95.93 billion. And we have Bitcoin dominance inching up at 46%. Price of Bitcoin, we have $35,000. Down 0.16%, and 24-hour volume traded in Bitcoin at 8 a.m. is $38 billion. And we have that chart now. We still see that rejection at 36,400. The next resistance will be at around $37,000 to $38,000. But now we could hit that support of 29,000, and we should be watching for that coming soon. Price of Ethereum, $2,139 with 24-hour volume, $25.11 billion traded in Ethereum. And we have BNB, top odds by market cap. We have BNB in the green and XRP at 68 cents. Surprisingly, we have XRP in the green this morning. Could be as a result of the SEC judgment. We'll get an update on that soon. But let's talk to Rume Ofi now. Hello, Rume.
Hello, Ladi.
Great to have you, Rume. So
Thank you very much.
I see Coinbase is in the news. They are launching a crypto app store. Tell me about that.
Okay, first and foremost, Coinbase is a digital platform that provides wallets and exchange platform based in the U.S., funded by Brian Armstrong. They are coming up with an app. The App Store, the way you have on an iPhone or the Apple device where you have App Store. Brian Tracy is saying that because of the fact that the industry is moving really fast, it is going to be very, very good that we have a crypto App Store. This is going to be piloted by Coinbase with Apple. Apple is the company whereby all of these applications, and before now we have about 1.8 million apps with 40 languages. So you can imagine having a crypto app store where applications that have anything to do with cryptocurrency, be it decentralized platform, developers can build theirs and use API to have access to all of those, so that users can have access to all of those applications. So you don't need Coinbase to tell you what to design. You just design it as specifications required from Coinbase. So all of these things is going to help the user of Apple's product to be able to access either decentralized finance or just cryptocurrency.
All right.
And it's a very big one. It is really going to help the crypto ecosystem to even go further. And don't forget that Coinbase is actually has positioned itself to regulatory guidelines in the US, and the German watchdog has just approved their USDC, which is custodian for the German populace. So they have been very, very smart, and they have been working well with the authorities. And I believe that is what government actually wants.
Okay, but I noticed that Binance seems to be getting all the regulatory clampdowns. Now, what's going on with that?
Okay, before now, about 3 years ago, when I was still doing a few courses of consultancy on crypto, I was always discussing with my teacher. See, the truth is, Binance is, they have the Chinese have their own business model where they just come up or prolong the trouble days to further in the future. So of these countries where you are domiciled as a business, for example, have their own regulation, right? And crypto is not a friend with, obviously not a friend with government, because they are still not understanding what is actually going on with crypto. And all of these governments believe on the sovereign currency. So for Binance going into every country, setting up, adhering to a few guidelines and not adhering to others, it is obviously going to spare doom. And issues like this is something that they would have negotiated. That is where Coinbase actually stand out, and they are pushing gradually. So it is better to face regulation and you become friends with them, like the Coinbase have done with SEC in the US and some other places, than just go into business. Then when the regulations come, you are found wanting. I think that is exactly what is happening, and more is going to happen. And I think they have a way to manage it, because it's not going to be very easy for Binance.
All right, Rume, we'll keep watching that. Thank you so much, Rume.
Thank you very much.
All right, looking at top 5 gainers, we have Ethereum Classic up 29.66% this morning. They have that Magneto upgrade coming on the platform. That's why we see that rally. It was $38 earlier in June. We have UMA up 18% and Waves DEX up 10.46%. So, it's not looking bad, but yeah, Bitcoin got rejected.
Yeah, it got rejected. That's the breaking news. All right, thank you so much, Ladi. And thank you so much for joining us on this episode of Business Morning on Channels Television. Let's do it again tomorrow. But before tomorrow, 1:30, Business Incorporated will be here with updates from the business world. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.